Good afternoon. We're going to take a look at SPX on multiple time frames and also the Elliott wave picture towards the end. We're going to spend a little bit of time on the daily time frame so we can really dig down and see what's happening and what our alternate pattern might be. So stick around and don't forget to go down to that bottom right hand corner, hit that option center logo, and subscribe. So thanks for being with us here today. We have SPX on the monthly time frame. We are still in this range. This is the monthly candle. It's a small range so far. We're just kind of squeezed right between that 20 moving average, the simple moving average, and 8 EMA. It hasn't changed from my last couple of videos. Towards the higher time frames, we're at the top of the range, and most likely situation is that we revisit the bottom of the range again. This is a range play. We've been in this for 12, 13, 14 months, something like that. And so this isn't going to really going to tell us much in the coming up for the next weeks or so. It's really just saying, hey, there's a chance that we move down. Okay. But the lower time frames, we have the weekly. You see it, we had broken out from this downtrend, back tested, and is pushing. Now it's not there's not much momentum to it, but the fact is that it's trying to make another high. So we have lower highs and lower lows in place so far, and we'll see what happens. We had that move. We had a range week last week, and we actually engulfed that. So that's actually bullish. Let's see what next week brings. We still have this kind of this pattern here. We can test this 100 simple moving average. Okay, we can eke out a new high, and that's going to be our alternate plan. I'll show you that on the daily time frame. So let's go there. Okay, don't forget, we do these videos very often, so don't forget to hit that notification bell if you want to receive this information often. Now look at this range with a MACD triangulating here on the RSI. We're towards the top of the range. We still have a little bit of room left if we need to go a little higher. Now, what we have been looking at in the past videos, the past recent videos, is this being a triangle. Where this is A, B, C, D, and E. And that still is valid, but it's right at the point. And I'm going to show you, not only here has it that close right on the top of the triangle. So it's kind of being rejected at this point, but there's no follow through. We can't tell what's happening there. So right now we have the monthly chart that looks bearish. We have the weekly chart that is firming up to the bullish side. And we have this daily chart that says we're at the end of our move to the upside right here. Now we have a gap above us, and we have this 4,300 area. So keep that in mind when we're looking at this Elliott wave count. So here's the Elliott wave. We got the neighbors doing the lawn right now. Sorry, but if you can hear the lawnmower. But so we have the count here where it's at A. It's kind of in gray there. B, and then this is a three-way move up for C, the D in gray, and E. And we're right at that 88.7% retracement from this move here. And so that makes it a perfect move for that triangle, and we should see a move down from here in that scenario. Now, this still can be counted. I don't like how deep the retracement is at 88.7, where this is the end, where this is the ABC correction here, and this is a 1-2 setup, and we move further down. That's fine. You can count it like that. It's valid. It's just such a deep retracement. Okay. So that could be like that, but I think it's more like the triangle continuation pattern, and then we have a 1, 2, 3, 4, 5 down for a larger wave one. Okay, now what's all this stuff here? I put this 8 here for this correction. If this is the end of the large move down, then this could just be a correction for a B, C going into A, B, C going into B, and a C wave, which should be a 5-wave impulsive move, which would change this into a 1, 2, possibly the end of 3, and then correction down. And you'll see on the when I bring back the next frame that the 40-80 area is going to be so important this low, where we have a wave 4 and a wave 5. Okay, and that could possibly be all the way up to the 4300 area, where that's a 618 retracement from the top. So this is all a valid play here. And the only thing I didn't want to go into this too deep, but this invalidates this 100% move to make this a leading diagonal, meaning if this is a 1, 2, 3, 4, 5 wave move for a wave 1, and then you get a larger wave 2, because wave 3 would be the shortest if this wave comes across this 100% there. So that would take out the leading diagonal play. This would be for sure a correction then, unless you you somehow finagle a 1, 2, 1, 2, 1, 2 into that. That's just not really probable. Okay, so all in all, we think the triangle is still valid. It's right at this top. So let's go back to looking at the this frame and kind of taking out. Don't look at the triangle so much. Look at this range here. Okay, this support / resistance is about that 4080 to 4090 area. Now remember from the last videos, and this top here is around the 4160 or 70. Okay, super important area. Okay, we talked about this multiple times. See how this chops around here? We're just in a chop zone. We have this chop zone. I put it on, if you watched some previous videos, it was on my default frame, and I showed you this chop zone here. That's all that happened. We came up to that chop zone, and I thought we may have rejected from it, but we got into the zone. Now, all we're doing is chopping around, just like the rest. So really, could this whole next week be chop? Sure, it can, but we're definitely gonna look to play to the downside. Okay, that is what I want to get across there, and then we'll show you on the 65 minute just so you can get a better view of that zone. We'll zoom in here. This channel is going to be important. If you're conservative, you can wait till price breaks underneath this channel. That's a real conservative play. If it breaks down from this very important 4080 area, which is right where the options expected move is. If you're not familiar with the options expected move, I'll put that card up top. Break down from here, and then you could start playing more aggressive to the downside. Above here, above the 4160 to 70 area, there's a gap here that wasn't quite complete or filled. Once you get above that, you're above the chop zone, and then I think we go all the way to 4311. Okay, so very important area. Get above here, and then we go all the way to 4311, possibly. But I think that would be the case, and we will play to the upside there. We have negative divergence. I don't see that happening. I see a big rejection off this area. I see possibly this starting off as a 1-2, going right to the triangle again. Okay, and then we start moving further down. That's how I'm playing it. You do what you like. I'm just trying to give you my perspective of the market. Okay, so that's what I have for you. The one thing that I did not like that was in the past videos is the VIX. The VIX is breaking down. Okay, it's coming into an area to where there should be some support coming up here soon. But that says that the market goes to 4311. If we don't get any support coming up here, I'll have to look back to see if there's anything around this area besides the bottom of this wedge. I mean, it broke down from this triangle that I had. So really, this is a bullish clue that we go to that 4311 area. Okay, we'll have to keep an eye on it until we get above the level that I was talking about, 4170, the 4170-80 area. Then I'm still playing to the downside. All right, that's all I got for you. Don't forget to like the video. We will talk to you soon. possibly tomorrow or Monday. Have a great day.